Alright, yo guys, so welcome to another YouTube video. Welcome to another educational video, you know what I'm saying. So if you're new to the channel, my name is Ballo.trades and I document my journey to become a successful forex trader here on YouTube. So I would appreciate if you smash that like button, smash that subscribe button, and smash on that notification bell to notify you guys when I'm dropping another video. So yeah, man, have another exciting video for you guys. So I hope you learn one or two things from this video. So like the title said, guys, I'll be sharing basically my winning setup that I found actually being profitable when I enter, you know what I'm saying. So without any further waste of time, let's get into the video. Yo guys, sorry to interrupt your viewing, but since you're watching this video, I would assume that you're an inspiring full-time forex trader just like me. So what do we need in order to become a successful, profitable trader? We obviously need psychology, strategy, and obviously capital. And how do we access capital in this day and age? We use prop firms, which brings me to my highly recommended prop firm, the Forex Funder. The links will be in the description. To check the legitimacy, you could go over to Trustpilot on any preferred browser and check the reviews and legitimacy. And be sure to check in the Instagram account. They always post their weekly payouts and how many people passed, how many people failed. The transparency is just crazy. So all the links will be in the description. And yeah, man, let's get into the video. Alright, so for this video, guys, I have for you 5 setups that I trade that I found being the most profitable in the strategy I trade, right? So if you're wondering what strategy I trade, the past 4 or 5 months since last year December, I've been trading the Falcon strategy, for those of you who might know. But this recent month I've been on another strategy, well, the same strategy, but then, well, honestly speaking, I still trade the Falcon strategy, but then the way I trade it is very different from the Falcon community itself, because there's a lot of things that I've rethought about the strategy that I was like, okay, now this is not going to work for me, you know what I'm saying? Because there was a time where I could wait for like a setup for like 2 weeks, you know what I'm saying? And at that, I found some other things, but it's irrelevant to this video. So yeah, man, for you, I have 5 setups that I trade. And yeah, man, let's get to the first one. So the first example I have for you guys is this one, which is the first one I have for you guys is this one, which is the hook point, right? As you can see, we had this hook point right here, down below here. Then we arrived correctively. So this is just a brief example. I'm going to show you on the charts how I draw it, you know what I'm saying? So this is just a brief chart. As you can see, this is my first example for this video. We have this hook point on the left where the horizontal line starts. Then we have this corrective move towards the downside. As price tapped into the horizontal line, I entered from the hook point, but in this case I was late, so I entered on the continuation pattern, right? Another example I have for you is another hook point right here, another example of a hook point, which is this one. As you can see, the hook point on the left through my structure. In this case, I entered at the right time, so as you can see, price went and rallied down. And actually this position by itself, it banked me around 3%. I'm not really sure, because this is a trade I took long ago. I journal my trade, so this is one of the screenshots that I took from my journal, you know what I'm saying? So yeah, man, this is another example. So the third example I have for you is on the setup is this one. As you can see, on the left side we have this hook point, then price arrived correctively at that hook point. So this trade actually happened to be break even because I moved my stop loss to entry too early, you know what I'm saying? So let me just show you on the charts how it looks like. Let me just show you in the chart. So here on the chart right now, so what you want to look for is, you want to look for like liquidity, where liquidity is. I'm saying there's a saying that says, if you cannot spot liquidity, you are liquidity, you know what I'm saying? So let me draw this quickly. There's a push, right? Then another push, right? So how I identify liquidity is that liquidity for me is rather generated or triggered. So as you can see here on the charts, this one is more generated. As you can see, it had that long consolidation, then it pushed up with high momentum. So this is our liquidity point right here. This is our liquidity point down here, right? So what you want to see is price moving towards that liquidity in a corrective manner, because you don't want to see something impulsive going into that liquidity area, because the chances are it might break, then further go down, you know what I'm saying? So you want to see something corrective, right? As you've seen from examples, you want to see something corrective going down, correctively going down, correctively going down. Then as soon as it taps here, I have my entry criteria right here. I'm not gonna really dive deep into my entry criteria, but then I know what I'm looking for. Then I'm looking for specifics in this area right here. Then from there, as you can see, price arrived wrong tool, price arrived correctively. So I have my first confluence, which is being price is at a liquidity area, right? Price is at the liquidity area. My second confluence is that price is arriving correctively at that hook point slash liquidity zone, right? Then we tap into that hook point. But then the thing I want you guys to notice is that the price has to break that hook point. It has to break. Well, it doesn't have to break significantly, but it has to be a convincing break, you know what I'm saying? Unlike something like this, where price is just equal. This one I would be cautious with taking, but then if I see a clear convincing break, then I would take it. All right, that is the fifth example that I have for you guys for my first setup. So right now we're moving on to my second setup, right? My second setup, which is the setups by trade, guys, is very basic and simple. So the second setup I have for you guys is this one. So on the left, where the horizontal zone starts, it's a hook point. It's a hook point, an area of, not a hook point, an area of liquidity, you know what I'm saying? So as you can see, price generated right there. It generated and spiked up, right? So we want to see price go back, then start correcting from that liquidity area. So this, you might say this is similar to the first example I gave you guys, but then this for me is different. I can differentiate between the two, you know what I'm saying? Because I'm going to make an example right now. Let me just go in the charts. I'm going to make an example of the first one and the second one, right? Let me just do this. Okay, this is the first example, right? And the second example, as you could see, price was generated liquidity, right? We generated liquidity, then we pushed up, then we came back, right? So this whole structure for me is different from this one. So as you can see, this one came like impulsively towards the liquidity area, but then as you could see by the example I gave you guys, it started correcting just above the liquidity area. Then it broke the area of liquidity, right? Then it went up. For me, let me just delete this one on the right, on the left. Let's focus on this one. Okay, so okay, let me just put it here. Yeah, as you can see from the previous example that I gave you guys, we had this corrective move, right? And we have this liquidity. So as you can see, price came back impulsively to that liquidity zone. So I'm looking for my entry criteria. What I'm looking for in this case is for lack of momentum going into that liquidity area. What lack of momentum shows me is, it gives me a clue that price is slowly losing momentum going further to the downside, right? And I have it mixed with the liquidity area. Unlike price just randomly stalling out of nowhere, I have no confluence whatsoever. But this one I have lack of momentum, and lack of momentum is based at that liquidity area, right? So something like this, you can see losing momentum, right? So for me, this here is different from this. Let me just do this. It's different from this. as you can see, this one here, it is very, very impulsive and very clear to see the direction. But then over here, this block right here, as you can see, price is corrective. It doesn't really have much progression to it, right? So this is my first signal that price is losing momentum towards that liquidity area. So it could signify a buy, right? Could signify a buy. So what I would do is place my buy here, right? Then go for my usual risk to reward ratio. I'm saying this is plain and simple, guys. Doesn't need to be hectic or difficult. So let me just give you another example of setup 2. As you can see, same thing I drew on my trading view, right? Built off momentum right here, went up, very up, then came down impulsively, then we had that loss of momentum. Then I put my buy stop over there. Actually, I think then I put my buy stop over there, then tapping in, then we went up, right? This trade actually ended up hitting take profit, right? So I just want to share, I think I'm in a similar trade right now as we speak. Let me just check on Euro, GBP, USD. Yeah, man, I'm on a similar trade right now. I just entered this trade about a few minutes back. Same thing, guys, as you can see. We had this area of liquidity right here. This is the live markets, by the way. We had this area of liquidity right here. We had this impulse. We had this corrective move towards the low, towards the liquidity, right? So I entered just above the so I entered just above the pattern, the descending pattern, right? So right now I'm tapped in. As we speak, I'm in the trade right now. So yeah, man. So let me give you guys another example of the setup 2 which I have for you guys. As you can see, the next example is this one. As you can see, we had this area of liquidity, then we went there correctively, right? Then we went there correctively. So this one, actually, being completely honest, this one hit my stop loss. Reason being, it was one of those trades, guys, you know what I'm saying? You lose some, you win some, but then I'm still gonna take this trade any time of day. As long as it appears, as long as it meets my entry criteria, then I'm gonna take it. I'm saying it happens that this one hit my stop loss. I'm saying, so let's move on to the second example that I have for you guys. Is okay, this is the same thing. Okay, apologize, this is the same thing. Let me just do this. I think I have another one. Replace setup 2.3. Let me see. Yeah, we have another one over here. A third example of this kind of setup. So yeah, man, this is the third example of setup 2 which I have for you guys. As you can see, you had that area of liquidity. We arrived correctively. Then we had this corrective move towards the liquidity. Then this one actually ended up also hitting my TP, but then I think this one I can't remember it properly. I think I closed it manually because I was going to sleep or something like that. We were going into the weekend. I can't really remember, you know what I'm saying? So yeah, man, moving on to the next setup, which is my setup 3, and I have example for you guys. Sorry about that. Setup 3. So this one, guys, I don't want to say my favorite, but this one I'll take it any time of the day, you know what I'm saying? So setup 3, the first example I have for you guys is the 2-touch entry, the 2-touch continuation. So what we have here is just an impulse move to the upside, then a bit of consolidation, right? As you can see, we had the first leg going down, third leg, fourth leg. As you can see, this was some might say it's a double bottom, but I look at it from a different perspective, you know what I'm saying? So it's a 2-touch. For me, it's a 2-touch continuation. As you can see, we have that impulse move, then we have this correction, then another impulse move. Let me just give you guys an example on my trading view. So this one goes like this, right? We have our impulse move, right? Then you have our leg pulling down, then price forming another high, right? Then it hits the 2-touch, right? So This one, I'm not gonna lie, I love this one, guys. So yeah, so as you can see, this one is a 2-touch entry. I'm not gonna lie, this one is my favorite, guys. I don't want to say favorite, but then I like this one. I'll take it any time of day, you know what I'm saying? So yeah, man, this is basically simple, guys. This setup is simple, and it's simple to see, you know what I'm saying? But then obviously the market is not perfect, so there's gonna be setups like this that's gonna be a lot uglier, you know what I'm saying? So 2-touch at the bottom, then we enter from here, right? But then one thing I want to share with you guys is that I don't just enter the market. I need to have a set criteria from this point right here. If the market does what I want it to do from this area, then I'll be sure to put my buy stop right there, I'm saying. So another example, even I'm even in this trade right now. So I'm in 2 trades, I think, for today, right? Chef JPY, I think it's Chef JPY if I'm not mistaken. As you can see, yeah, as you can see, so this is a live market. So as you can see, there's a live market, guys. I'm in this trade right now as you speak. So the market is, as I said, the 2-touch, then 2-touch at the bottom, right? Then I entered the market. As you can see, let me just remove this. As you can see, my criteria here was this week right here. I could see that this week washed out all the orders, so it was my entry point that I'm saying. So I just entered my buy stop right there. Then yeah, man, I'm just targeting a risk to reward ratio of 1:2. I'm saying, as you can see, it's pushing up, guys. It's pushing up. But then yeah, man, let's move on to the next setup. Well, another example of this same setup. Let me show you. As you can see, I have different and many setups from this example. As you can see, 2-touch, 1, 2, then we buy. This one actually hit TP, you know what I'm saying? So yeah, man, another example I have for you. This one is on the larger scale. So this one is on the larger scale, on the 1 hour larger scale. As you can see, same thing, double bottom, whether you might call it double bottom, why I call it 2-touch entry, you know what I'm saying? Then we entered, then yeah, man, the rest is history. So moving on to the 4th setup that I have for you guys. So this one is so setup 5 and setup 4. Setup 5 and setup 4, I actually have like one example for each, because this doesn't happen frequently, you know what I'm saying? But then it's still part of my setup. When I recognize it, then I can execute. But then this one is a bit scarce in the market, you know what I'm saying? So let's move on to setup 5. So setup 5, this one is basically simple. You just need to identify a liquidity area, then price arriving correctively at that liquidity area. This might be similar to the I think the second setup, but then for me it's different, guys. I know my setups, I know which one it is when I see it, you know what I'm saying? I don't have to think about it that much. I know, okay, this one is my 4th setup, this one my 2nd setup. I could differentiate between the two. So this one is simple, liquidity area, find, then price arrives correctively at that liquidity area, then we buy, right? Going into my 5th and last but not least setup, right, which is setup 5. Setup 5 is the most simplest. I'm sure you guys even have traded this setup, which is the continuation. I have only one example, because this one, guys, I'm sure you guys traded whatever strategy you trade. Even if you trade price action, I'm sure you must see this setup, you know what I'm saying? This setup is basically a continuation. It doesn't get any simpler than that. This one is basically just a continuation. We have this sideways movement, which I call the stall in price. Then we go down. It doesn't get any simpler than that. But then if I could make an example on the charts, it's basically this. It's a push, then a continuation, and a push, right? But then I look for specifics within this continuation. So what I look for is that this here, you see these legs that go down, up, they have to be corrective. I don't want to see impulse movements within this range right here. I want to see like price being undecided, you know what I'm saying, moving in a corrective manner. Like, I want to see something convincing that, okay, this is a stolen price. I'm saying I don't want to see this, guys, like straight, like impulse candles. Nah, I want to see corrective movements within that blocks. So I just mark it up like this, like that. Then I put my buy stop above there. Then the rest is history. You know what I'm saying? So yeah, man, guys, I hope you enjoyed this video. That was it for this video. Please click that like button, the subscribe button, and click on the notification bell to notify you when I'm dropping another video. And guys, be sure to sign up with the best profile out there, guys, the Forex Founder. I'll leave the links in the description, and be sure to follow my Instagram account. I'll also leave the links in the description. And yeah, man, I appreciate you guys for arriving this far in the video. Peace.